Hi everyone, welcome back to Kingdom Wealth Creators. Over the past few weeks, there's been this news about this conflict between Russia and Ukraine, and it has been dominating the headlines. Every day, we will have some sort of news or even rumors that will start to drastically affect the global markets. You can see them swinging to the upside or the downside quite quickly as soon as a news headline breaks out or even a rumor starts out. So today we're going to take a dive into seeing why does this conflict affect our markets and what can we do as investors during this time. Now, the first question on the minds of most Indian investors during this situation is why is a conflict that is happening thousands of kilometers away between two other countries, Russia and Ukraine, affecting our markets? And I understand that's a very key question. A lot of people have asked me this question. Well, the answer is very simple. It's simply because today the world is a global village. All our stock markets are globally interconnected. So, a move in one of the markets would see a similar move in other global markets. So, something of this magnitude, when a conflict is happening between a country like Russia, which is one of the largest countries in the world, and its neighbor, would see some changes happening in all the global markets. For example, on Thursday, you saw the US market go down by 3%. And just because of that, on Friday, almost all the markets in the world were down anywhere between 0.1% to 2%. So basically, all of these headlines and rumors about this particular conflict is causing a lot of volatility in all the global markets, including our very own India. Therefore, what can we as investors do? If you actually study all these global crises that have happened over the past, say, 40, 50 years from World War II, you will notice that, these do affect the stock market, but not as bad as you think. In fact, a study that was done in 2020 will highlight, what was the changes or how the markets were affected by almost 20, 30 global events that happened from World War II onwards. What is interesting to note here is that it was these unknown or sudden events that happened, like, say, the attack on Pearl Harbor by the Japanese or the 9/11 incident, which came out of nowhere that saw a drastic one day fall in global markets. But otherwise, if the conflict was something that was gradually building up and started, usually you wouldn't see a huge fall because some of that fall was already factored in the previous days. And even if there was a fall in the market because of a conflict, you would see that the data shows that there was eventually a V shaped recovery. The average fall that you can see during these conflicts is something around 5 to 6% from the top to the bottom, and then we saw a recovery. Well, what does that mean to us in the current context of this Russia versus Ukraine conflict? As you already know, there is a lot of volatility in the market. We have seen the market, go up by 200 points on one day and then come down by another 200 points on the next day, depending on what news or rumor was happening that day. As long as the uncertainty of this conflict continues, you might see global markets not go up by a lot, but stay in a range. They might rise, they might fall quickly because of the volatility, but not actually go up until the uncertainty is resolved. If the uncertainty of the crisis is resolved, the markets would drastically shoot up. Now, what should we do regarding the Indian market? Well, as of now, it is very likely that the market is going to be in a range, volatile, in fact, moving up and down quite a bit, but between 16,800 and 17,000 as their support, and between 17,450 to 17,600 as the immediate resistance. So, as an investor, I would buy more if the market starts dipping to 16,800, 17,000 levels. I would still keep some more of my capital dry in case the markets were to fall down even further. But those are places where I would try to find support and try to enter into the market again. On the upside, if I were to see 17,500 being breached, then I would say that, okay, it's time to take fresh positions again. As a trader, well, we just follow the market trend. If the market trend for that day or the trend for the week is looking weak, then we would go in that flow. If we see it's reversing, then we start taking long positions. It's simple as that. So I hope you enjoyed this video. Thank you for watching it till the end. Do remember to subscribe and like our channel and share our videos. Have a great week ahead.